BlackRock just made 3 huge moves, and if history repeats, these stocks could explode. Back in 2009, a $1,000 investment in Netflix would be worth over $300,000 today. In 2010, the same bet on Tesla would have turned into nearly $280,000. Most investors missed out, but one firm didn't, which was of course BlackRock. They've been spotting winners for decades, quietly buying before anyone else was paying attention, and here's the best part. They are required by law to disclose their investments. This means we get to see exactly what they're buying right now, and their latest report shows 3 stocks that could be massive opportunities. In this video, I'll show you which stocks they are, so let's dive in. First up, the stock BlackRock loaded up on more than any other is COF, or Capital One Financial Corporation. They added another 22 million shares, that's an 80% increase from their previous position. But before you rush out and buy COF, there are a few important things to keep in mind. First, does BlackRock investing mean this stock is just going to keep going up forever? Absolutely not, which is why it's crucial to watch out for potential resistance levels. The points where the price could hit the ceiling and where you might want to consider taking profits. So where exactly are these potential resistance levels? To find out, we can use the Fibonacci extension tool, which looks like this, and the way it works is these levels of the Fibonacci are roughly where we tend to see the price find resistance. So we usually tend to see the price go up to one of these levels, pull back, go up to the next level, pull back, and so on. Knowing this, investors using this tool like to lock in some profits around these key areas, which puts them in a good position to buy back at a discount if the price retraces. So based on this, what are some areas where we could see COF find some strong resistance and where you might want to consider taking some profits? The first price target is going to be around here, which is $242. The level above this is going to be around here, which is $270. And the third price target is going to be up here, which is $348. There are some price targets above these 3 as well, and I'll talk more about those in future update videos as the price gets closer to these 3 targets. So as the price starts climbing up, locking in some profits as it gets to these key Fibonacci levels could be an exit strategy you might want to consider. Having an exit strategy is very important as it enables you to make the most of runs like this, and it also gives you opportunities to lock in profits before heavy retracements. The only thing worse than not taking profits up here is initially getting in here and watching the price plummet straight away. This does not feel good, but there are things we can do to reduce the chances of this happening. And one of the tools we can use is called the Fibonacci retracement, which looks like this. And the way this works is as the price starts retracing, these levels of the Fibonacci tend to act as support for the price. So we usually tend to see the price coming down to one of these Fibonacci areas before bouncing up to make higher highs. Knowing this, investors using this tool like to either buy or dollar cost average down around these key levels, which enables them to have an average entry price as close to the bottom of the retracement as possible. So based on this, what are some areas where you might want to consider either getting into COF or adding more to your position? The first entry level is going to be around here, which is $207. The level below this is going to be around $192. And the third entry point is going to be down here, which is $180. So initially getting in at the higher Fibonacci level and dollar cost averaging down at these lower levels, if this retracement continues down, could be an entry strategy you might want to consider. Now, if you're thinking, okay, these entry points and the price targets make sense, but I don't have the time to constantly keep an eye on the price, To catch it when it hits one of the key areas, then don't worry because I've got a free solution for you. I've got this free service that you can sign up for, and I'll send you alerts as soon as the price hits our entry points and also our price targets completely for free. The link to join this is in the description below, but don't worry about signing up now. Feel free to continue watching this video and I'll remind you about this at the end. So Capital One Financial Corporation was the first stock on BlackRock's latest report. The second largest change was actually to an ETF, so we'll skip over that and go to the next stock, which is AMT or American Tower Corporation. They've added another 2.6 million shares to their position, which was a 6.23% increase. To figure out where we could see AMT find some strong resistance and where we might want to consider taking some profits, we can use the Fibonacci extension tool again, which looks like this for AMT, and the first level where we could see the price find significant resistance is going to be around here, which is $235. The level above this is going to be around here, which is $275, and the third price target is going to be up here, which is $339. So from the current price, we're looking at a potential upside of around 60% to this price target, which is not bad, but it can be even better if we can secure some cheaper entries. So let's now take a look at the Fibonacci retracement to get some entry points. This is what the Fibonacci retracement is looking like for AMT, and some areas where you might want to consider either getting in or averaging down are going to be the following. The first entry point is going to be around here, which is $210. The level below this is going to be around here, which is $203. And the third entry point is going to be down here, which is $196. So American Tower Corporation was the second stock on the list, and you've probably noticed I'm using technical analysis to break these down. Some people trade based on the news, others focus on earnings, and then there are those like myself who stick to charts and indicators. There are lots of different ways to invest, but if you're wondering which strategy performs the best, the one that's given me the biggest edge is tracking what powerful politicians are buying. Today we're looking at BlackRock, the largest asset manager in the world, but over the past few years, I've been following another group that consistently beats the market. This group is US politicians. Their trades often signal something bigger happening behind the scenes, and being able to track that has had a huge impact on my results. If you're curious about how it works, I put together this free video that walks you through the exact strategy I use, with real examples and the actual results it's delivered over the last 3 years. The link to this video is in the description below. Feel free to check it out if you want to see how powerful this strategy can be. Coming back to the third stock on BlackRock's report, and it is INTU or Intuit. They recently added almost 1.5 million shares, which increases their position by 6.12%. This is what the chart is looking like for Intuit, and to get some price targets, we can use the Fibonacci extension tool again, which looks like this, and some areas where we could see the price find strong resistance and where you might want to consider locking in some profits are going to be the following. The first price target is going to be around here, which is $804. The level above this is going to be around here, which is $877. And the third price target is going to be up here, which is $1,091. So similar to what we've said for the previous stocks, taking some profits around these Fibonacci levels as the price starts climbing up could be an exit strategy you might want to consider. But before we can exit, we need to enter. So for that, let's now take a look at the Fibonacci retracement. Here's what that looks like for Intuit. The current price is below quite a few of these levels, so it's not too bad. But some even better entry points where you might want to consider averaging down at are going to be the following. The first entry point is going to be around $640, and the level below this is going to be around here, which is $592. So INTU was the third stock on the list, and here's a longer version, so feel free to pause the video now if you're interested to see what these are. I will be bringing you update videos as new investments are disclosed and also as the price approaches our key Fibonacci levels. So if you'd like to stay up to date, consider subscribing to the channel. I'll also be bringing you the best investment opportunities multiple times a week, so that's another reason to subscribe. Also, if you found this video helpful, please consider hitting the like button as that helps out the channel a lot. And if you'd like to learn how to profit like a politician, the link to this free video explaining everything is in the description below, so feel free to check it out if you're interested. As promised, this is a reminder to sign up for the free alerts. The link to join this is also going to be in the description below. It's worth mentioning I'm not a financial advisor and this is not financial advice. Please make sure you do your own research and your own analysis before you make any investment decisions. If you have any thoughts on these free companies or want to share some stocks that have been catching your attention recently, then feel free to leave those in the comment section below. It would be good to learn about those. If you'd like to watch another video where I talk about the best quantum computing stocks to buy right now, then feel free to click on the video that's currently on your screen. Thank you very much for watching, and I will see you in the next one.